Okay, welcome everyone to another update. Today is Monday, November 30th. Guys, pretty much we're seeing a brand new month. Tomorrow is going to be December 1st, and we will be pretty much taking a look at the daily financial market report. And we're also going to take a look at a couple of things on that daily financial report that will better assist you to understand what's taking place and kind of give you an idea of what's expected to take place. All right. If you go back to the previous videos, I talk about there's certain indicators of the daily financial market report that indicates what's going to happen with a particular asset. Now, this account here is the our current market value account, which we obviously see that it is growing. It is going through its own little situation, which is normal, absolutely normal. But for the current market value so far for the whole month, it's pretty good. Normally, what I would have done was went ahead and closed all this out. I would have went ahead and just collected whatever needed to be collected. All right, for the whole account in total. But I'm not going to do that. I'm definitely not going to do that. Why am I not going to do that? Because this current market value account can go up until, guys, some of these trades, depending on the trades they are, can go up until 90 days. And I know some of you guys hear 90 days, you're thinking, wow, that's a long time to hold something. Guys, that's really the traditional way. The traditional way is even more conservative than 90 days. The traditional way, if you go to the stock market, that's the traditional way. You buy a stock, you invest in a stock, and you hold on to that stock for 5-10 years. I'm only talking 6-9 months. But I got it. It's the culture of the Forex community, okay? The whole industry, okay? So, guys, whether it's Forex, whether it's indices market, stock market, cryptocurrency market, commodities market, you name it, hold on to the CMV if that's what you desire. Hold on to it and you'll be able to make your profit long term. All right, just a matter of being patient, going through the drawdown phases. Once you exit out the drawdown phases, going to the profit phase. Okay, anyhow, I don't want to talk too much about that on this video. Let's get to the daily financial market report. Okay, so it is complete. Of course, you got to make sure you look at the research is completed. See if I could change the theme to light. Refreshing. All right, so research completed for November 30th. Always make sure you see that there. Make sure that's there before you take these trades. All right, I want to bring some things to your attention on this video, and that is here, the MAS. I told you I would bring it back. It's back. So the MAS scores are here. What is MAS? Stands for Market Alignment Score. Market Alignment Score, and it's just the average. So there's like 30, I believe there's 30 of these here. So 22, I believe there was 22 that's on fire, that are aligned. And then I just took the average and it gives me the percentage, and that's 73%. Okay, that's all. So, but what else? That's not it. I shouldn't say that's all. That's a part of it, but there's more to the MAS score. Look at the color. The 73% indicates that there's the majority, or there's a big amount that's aligned. A big amount of these things are aligned. Okay, or a majority of these assets, which happen to be the Forex market assets, are aligned. So that's 73% of them are aligned. That means that within the Forex market itself, skies are blue. I've given that analogy before, and that's pretty much what I want you to think when you're looking at this, when you're taking a look at what's going on. These should help you at least imagine how the Forex market is from that perspective. All right. So there's still some good opportunities in any type of market, what I highly suggest is this. If you're going to go ahead and take trades in any market, whether it's the Forex market, whatever market, using our daily financial market report, and you want to take the most safest route, then you want to take the ones that are aligned. Now, let's say, for example, you're holding something and later on it gets misaligned, and then it depends on you. It depends. If you want to continue going with current market value, then you hold on to it. You're just gonna have to wait maybe a couple of weeks before everything gets back in alignment again. All right, if you're willing and able to hold on that long and wait that long, okay, that's gonna definitely be a test on your patience, a test to you as an investor. Or you can go with the current market movement. If you want to go ahead and just kind of get out of there and you're seeing that the current market movement went against your overall thing, you want to jump out and get back in on a better week, then you come and start on a Monday or on a Tuesday. Okay, so that's pretty much, those are your options if you decide to do that. You're better off, safer with both alignments, and then you get the double doozy or the double whammy, whatever. You get the good cream of the crop. It's when you got the green. So we got the alignment score here is green. 73% is green. When it gets to 50%, it'll be blue. It's neutral. Okay. Then underneath the 50%, below 50%, it'll be red. Okay. That's how that's red. That's how you read it, interpret it. So it means that when it's green, things are pretty fair weather. The sky is pretty fair weather. All right. Now, you won't be able to see it now because there's only one score on here. But when we put the all of the market alignment scores for each day that I do an update, you'll be able to see a pattern forming. So look out for that pattern. Okay. If you go back to the other videos in the archives, I talk a lot about market alignment score. You can go back and study those videos as well if you want to learn more and you want to be more studious and figure things out a little quicker. Okay, go back to those archive videos where I talk about that. Okay. All right. So there we have it, guys. That's the market alignment. I just wanted to talk about that. And I also wanted to make mention another thing you want to pay attention to. Is how many stresses there are, and extreme stress. So overall in one market, that will give you an idea too of what is possibly to come. And if there are a lot of extreme stresses and you have a market alignment in the green, you can probably bet that more than likely the score is gonna go down, and it's gonna bring you down into a very, very volatile storm within that particular financial marketplace. All right. So here we have 100%. Sometimes you'll find 100%. You usually find that in the cryptocurrency market. We actually have 100% in the precious metals market. So there's definitely money to be made there. I mean, that's something you would look out for. Like, if you see the market alignment scores at 100% somewhere and you're like, oh man, I definitely got to get on this. And then you take a trade, and it's been like that for a while. It's been like, without me taking the market alignment score and showing it to you guys, if you go back to the previous videos and look at all of the fire symbols, the fire symbols represent the market alignment scores. You'll see that for the commodities market, it was pretty much it was at a high 90 percentile range. And that's pretty good. If you're there and you're holding on to your trade, you have a very high chance of making some funds. And a lot of people in our account management were able to make utilizing the commodities market. And it's basically 100%. It's a sunshine day, guys. All right. It's a sunshine day. All right. So let's continue to move on there. And we got a couple of stressors here. I believe that's extreme stress on some of these like UK oil. All right. Cryptocurrency, we have a 67%. It looks like it was down further, but it looks like it's bouncing back up. So we are seeing some kind of attempt to get back on track with some of these cryptocurrencies, guys, I'll just leave it at that because I don't want to give up too much information for the public viewers, because then, you know, I just can't do that, especially when we have private members paying. But look at the report and you can see the extreme stress, where it's taking place, what positions this extreme stress is trying to go up against. If you take a look at it, you'll get an idea of what's about to take over or what's about to take place again. All right. If you look at the report by now, if you've been very studious and paying attention, you'll know that, oh man, this thing is about to take on a whole nother shape there. Okay. Indices market, we have a pretty decent. Now with the indices market, you'll find that almost the whole, their pattern goes a whole way differently than, you'll notice that as we continue to move further along with these updates on the daily updates, you'll be able to see that what I'm talking about. So you have months and months of certain patterns taking place with indices. There's a lot of money to be made for those of you who want to do indices. This is definitely the place to be. So MAS score for indices is pretty much where we see it now. And there's some extreme stresses taking place. I will say that there are some extreme stresses taking place, and we actually have a takeover on one of these, which kind of, there was a takeover on the Australian. Let me see, there was another takeover somewhere else, on the UK. And we have some extreme stresses. So here, in this case, we seen this earlier in the month where the majority of these were like extreme stress, and then they were very resilient. With this market, there's a lot going on in the world, but I really feel that some of these will be extremely resilient. And I'm going off of the current market value. That's why. I mean, we saw some extreme stresses about 3 weeks ago, and then all of a sudden just like bounce back up. I mean, there's got to be a point, of course, where we're going to see a complete takeover and a change in position. There has to be. What goes up must come down. So we got that. But when it's going to take place, we should look out at least for that type of two things. Speaking from our perspective and the daily financial market report, two things we should look out for. We should definitely look out for a decline in the MAS score, okay, which tells you that there's a lot of misalignments taking place. And number two, we should definitely look out for the a lot of these extreme stresses indicators. All right, we're seeing a lot of extreme stress indicators on the current market movement, especially on the current market movement, because that's more relevant short term. So we're seeing these relevant moves that are just starting to take place, especially if we start seeing takeovers, and then we're like, okay, overall, something's about to go down. Okay, all right, but we haven't seen that yet. Right, we haven't seen that yet. We've seen some choppiness on a couple of these U.S. market indices. I think S&P 500 a couple times. NASDAQ did a little choppy movement on current market value, and that's pretty much about it. But nothing like really, really stern, and where, you know, the stock market just like completely tumbled over. Now, just to give you a last thing I'm going to make a note of, when that time comes, don't worry, guys. If you're getting access to this network, which is really a community, guys, check out the website. I got other stuff I got to put out there. I'm very excited about it, but go to the website. But once you get access to this community, and you're like almost in this bubble, you're like gonna be in this bubble outside from the craziness, away from the craziness that's going on outside. Okay, because when that market starts to tumble, this market and that market and everybody's stocks and stuff. I mean, look at what happened last week with the Thanksgiving, with the cryptocurrency. If you had this access to it, you wouldn't have been going through that craziness. Okay, that was crazy. That wasn't. I don't even know what to call that. I mean, I can't even fit a drawdown. That was like a crazy drawdown, insane. Okay, extreme volatility. That just was insane. Okay, like a 14-15% drop in value in one day. All right, but hey, you would have been aware. You would have been prepared, and we have better tools here to equip you guys to make sure you're better prepared. And there's still more things that needs to be done on this, guys, to help you even figure out even more how to make a better trade with the resources and information that we're providing. Okay, that's it. I'm gonna talk more on other videos about other things that we're doing. So I'll see you on the next update. God bless.